Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing. I want to talk about Fisker.
Yeah, we've been reporting on California-based electric vehicle maker Fisker, ticker symbol FSR, on the New York Stock Exchange a bunch, especially since the release of the Fisker Ocean all-electric SUV, a car that I didn't think I would ever see.
Right? Yeah, so car makers that only make electric cars like Tesla, Rivian, Polestar, Lucid, NIO, Aptera, and Fisker should, by definition, fall into the disruptive category, right? Because electric cars are the disruptive technology compared to their internal combustion engine or ICE counterparts. But as savvy viewers of our Disruptive Investing channel know, electric used to be the only disruptive technology.
But now we believe that autonomy is the second and potentially bigger disruption to ground transportation.
But either because most investors don't know about autonomy or don't believe it, many investors are simply looking for electric car companies to invest in.
So let's dive into the latest news on Fisker to see what's going on with them.
On August 30th, Fisker had a special meeting of their stockholders to approve a potential issuance of up to 20% of outstanding shares.
And let's zoom out for a second and understand why companies do this.
So once a company goes public, they can raise funds by issuing more shares.
Because that, by definition, dilutes current shareholder positions in the company, it would seem to go against the best interests of shareholders. So why would they vote for it?
Well, if existing shareholders think that by selling more shares, the company will be able to either stay alive or, better yet, grow, then generally they'll vote in favor of it.
Which is what they did.
Yeah. So what Fisker is going to do is offer $170 million in convertible notes to existing institutional investors. These notes, which will come due in 2025, will secure about $150 million in cash for the company.
Now, the notes offer 0% interest, so why would anyone want to buy a convertible note that doesn't offer any interest?
The reason is because Fisker is selling the notes at that 12% discount. So that means that the annual payout would be less than 6%, which, to your point, you could pretty much get in a bank. But institutional investors buying these notes must have the hope that Fisker stock will grow more than that by 2025.
So this would be like if I could get Tesla at, 12% off.
Right. And
like a Tesla share currently at 12% off, and then in 2 years, I would still have it.
Right.
But I would have paid less for it now.
Exactly.
Okay, that makes sense. So what is Fisker going to do with all this cash?
Well, the company says it's raising funds to, quote, accelerate deliveries, expand growth, and expedite the company's vehicle programs. Basically, continue operations since Fisker hasn't turned a profit yet.
Now, usually companies' stock takes a hit with news like this, right?
Yeah, true. But on Friday, when it was announced, the stock popped up, as you can see here on this chart. Now, this follows a separate convertible note offering that Fisker had to raise funds in July. That was also a convertible note offering of $340 million.
Okay, so two big kind of back-to-back convertible note offerings.
Yeah, so before these two offerings, Fisker ended the second quarter with $521 million in cash. These two new offerings should add another $490 million or so, bringing Fisker's cash on hand up to close to $1 billion.
Okay, wow. So, that's good, right? This must give Fisker quite a runway.
Well, let's take a look. I think the reason institutional investors have been willing to invest in Fisker since the IPO is that Fisker is actually making vehicles profitably due to their partnership with Magna Steyr in Austria. By the way, Magna Steyr is a company with a track record of making vehicles for companies such as Mercedes-Benz. They make the G-Class. BMW, they make the Z4. Jaguar E-Pace and I-Pace is made there. Aston Martin's Riptide is made there. Also, Fisker's financials are pretty good. Let's take a look here. So revenue in Q2 2023 was $825,000. That's not a lot, but it's up from $10,000 in Q2.
Okay.
Gross margins, 7.5% on a reported basis and 18.5% excluding discounted early stage investor deliveries. So the early cars were costing them more money, but if you take those out, which is what's going to happen from now on, pretty good margins. Loss from operations is $87.9 million, including $9 million of stock-based compensation expenses. You can read that as basically they're paying a lot of salaries in stock. And a net loss of $85.5 million or about 25 cents per share.
Okay.
Which in these early stages is not that bad.
So, the company itself isn't profitable, but because they're using a existing car maker to make the cars, the gross margin of the car is profitable.
Correct.
Which is better than can be said for even Ford.
Exactly.
Okay.
Which loses $33,000 per truck and car.
So Fisker expects to produce 20,000 to 23,000 units in 2023, and it anticipates an 8 to 12% gross margin range for the full year.
So Fisker just celebrated their 5,000th Ocean SUV produced at the Magna Steyr plant in Austria. And to refresh you on the stats for the Magna one, the launch edition, by the way, so that's $68,999 in the US. So that's the most expensive version, so it will get cheaper. Dual motor, all-wheel drive, 550 horsepower, 550 pound-feet of torque, 0 to 60 in 3.5 seconds, which is amazing. Top speed of 125 miles an hour. Standard features include that panoramic sunroof, 17.1-inch touchscreen, premium sound system, vegan leather interior, has an EPA-rated range of 360 miles from 113 kilowatt-hour battery pack. So, pretty good stats. Fisker is also working on developing its next-generation vehicles, including the Pear and the Ronin.
The Pear is expected to launch in 2024, and the Ronin is expected to launch in 2025.
But here's the thing. We've seen this before. Rivian is a company that only makes electric vehicles, and they came out with some pretty sexy-looking ones that are the R1T and then the R1S. No doubt that people like the design, but we've said this before. If there was no Tesla, these companies might do great. They might stand out. But it's hard to stand out when you're not as efficient as a Tesla, when you don't have supercharging network, when you're not as safe as a Tesla, when your software updates don't happen as quickly, and when you're not vertically integrated like Tesla. And it's hard to get your prices down. Well, Tesla has continually cut costs and passed those savings on to customers. These other companies are struggling to make a profit on their vehicles. Lucid is another example of a car company with a very sexy design, even a cool range. I mean, they have 500 miles, right? Plus. And they're struggling to compete with Tesla, because Tesla has the Model S Plaid.
But I might push back here and point out that unlike Lucid and Rivian, Fisker didn't have to build a factory. As you said, they subbed this out to Magna Steyr, so they didn't have all those capital costs.
And that's a good point. And in the beginning, it can be a good strategy because you get your cars off the line faster while turning a profit. The problem is, it's following the same playbook as Big Auto. Ford, GM, Stellantis, they sub out most of their automaking to other companies, which most people don't even know about, like Aptiv, Magna, Borg Warner, and ZF. And we all know what happens if you're not vertically integrated. You lose a lot of your profit to these middlemen companies that are basically building most of your car.
So my big question is, how will this play out for Fisker in a few years when they're trying to compete head-to-head with Tesla? And how does the UAW strike affect Fisker?
That's hard to say. On the one hand, Magna Steyr is located in Austria, so it's not affected by the UAW strike. But on the other hand, we don't know how many of these parts that are going into the Fisker are affected by part suppliers that may be in the US. My guess is that Fisker will fare pretty well if the strike goes on, so that's in the plus column for them. But I think the big piece here is that these institutional investors who are buying these convertible notes, they don't get the autonomy piece of this puzzle. These are the institutional investors that we're actually talking about. So here's the list. And they have heavily invested in Fisker, and they're going to keep buying into this round. Why? Because, well, if they don't, the company will go under. They'll run out of runway money, so they kind of have to keep it going. And I don't think they fully understand what's about to happen in terms of autonomy and the destruction that will take place.
But I mean, these are big funds, aren't they? I mean, they must have done their homework on Fisker.
A lot of these funds are placing strategic bets into the electric car space. It took them years to understand that electric cars are going to disrupt ICE cars. And so they are placing their bets in different companies that make electric cars. This one looks pretty strong on paper. It's led by a guy, Henrik Fisker, who used to work at Tesla, right? So that looks great. And he helped design the Model S. Awesome. Now that Fisker is actually producing the Ocean profitably, I might add, that makes this company stand out. But it took these fund managers years to understand electric cars, and they really only got that once Tesla had been out with their amazing cars for years. Now we're adding this second disruptive technology that most people haven't wrapped their heads around yet, right? Autonomy, full self-driving, robo-taxis. I don't think most of these get it. Now, disclaimer, we're not financial advisors. Do your own research, come up with your own conclusions. Investing is by its very nature a risky business. One of the main reasons why I don't think Fisker will be able to compete with Tesla is because they're a small company. They can't even produce the car on their own, let alone develop autonomy.
Okay, but if we're right and Tesla does come out with full self-driving cars before anybody else, and let's say nobody else can compete with them and their hardware and software, won't companies just license it from Tesla and put that technology in their own cars?
Sure. That's a possibility. It even sounds like Elon is open to that. So you may see a company like Fisker adding autonomy to their cars under a Tesla license. But how is that profitable for Fisker? I mean, Tesla will control how much that license costs, and it will not be cheap. And that's still ignoring how these cars are going to be used. A lot of people are still thinking about the existing ownership model of cars, where I own the car and I have it drive me around like a chauffeur. And while that's fun, that still leaves my car sitting idly for 95% of the time. Tesla's not going to do that. At least not with most of the cars they make. They may still sell some cars that you will own, but most of their cars are going to be driving around on their own network, the Tesla network, just like Uber's. Tesla network is going to utilize their cars almost 100% of the time and make money for Tesla that way. And just like Uber and Lyft get a huge cut every time someone hires an Uber or Lyft for a ride to the airport, Tesla will be getting a huge cut for basically doing nothing, right? Every ride, they've already made the car, they've already made the hardware and the software. They're going to get a piece of that drive every single time. And that's not from making more cars or selling more cars, just for letting that car drive around for 10 or 20 years.
And that would even include Fiskers that have, Tesla licensed technology in them.
Right, because I'm sure as part of the license, it's going to say you can only put this car on the Tesla network. Now, a lot of car companies might balk and go, well, then we're not doing it. Okay, don't do it, Fisker. What other network would you like to join? There will be no other network because you have to develop it.
And what other kind of autonomy would you like to put in your car?
Exactly.
Oh, there isn't any because none of them have been approved because they all are going to have to keep up with Tesla?
Now, you might push back. I think the only companies that might be able to keep up with Tesla a few years behind at least would be Chinese companies because they are basically copying Tesla. All of the other car manufacturers, the Americans and the Germans, don't want to even pretend that they know what Tesla is. So they're not copying anything. Here's my point. In America, do you think American regulators are going to be allowing Chinese cars technology to run? Because we all know what's going to happen to that data, right? We already stopped Huawei in this country. We don't want China driving around with cameras and microphones. And I don't think most passengers want that, right? Because we don't know where the data is going. It's a whole new world here. Right now, you have this phone. I don't know if it's recording everything I say right now. If it was an Apple phone, it probably is. If I get into a car, it now knows, just like my phone does, where I am, what I'm saying, right? Or could potentially know all these things. It could be recording me, who I'm with, what am I going to do, right? Am I going to a nightclub? All that stuff. I think people are going to start to get wigged out by this because they're going to realize like, oh crap, I don't just hop in my old car and no one really knows where I am if I shut off my phone. This car knows where I am. And I don't think people are going to want to be in a Chinese car.
And I mean, again, this is just, it's such a hard thing to wrap your head around because you really do need to believe in autonomy in order to think that this is going to happen.
Well, and if you watch to the end of this video, we started by talking about a quarterly report of Fisker's, right? And a convertible note. None of that matters, right? Because whether or not this convertible note happens successfully, whether or not the stock price, has a little bump up or bump down, that's what all the other morons are focused on. You need to be focused on the disruption piece. What part of Fisker is disruptive? A few years ago, electric, yeah, that was disruptive. But what we're trying to say here is there's a new technology in town, and it kind of dwarfs the electric piece as much as I love it. And so where in Fisker, please show me in the comments below, please show me where Fisker is talking about their amazing autonomy technology.
Well, and this is the hard part because I think for a lot of people, the Model S came out and it was the disruption, right? The Model S disrupted everything. It had over 200 miles of range. It could supercharge. It was amazing. It's even hard for me to wrap my head around the fact that we are further disrupting that the Model S and the Model Y are completely blowing it out of the water. I mean, I went to a version 2 supercharger the other day and I was like, it's so slow because I'm used to the level 3s now. Fisker's Ocean would have blown the Model S out of the water had it come out 10 years ago.
To your point, if you're a computer gamer, and I'm not really that strong a gamer, so my examples probably won't be that good. But when I started gaming, there was a card you could put in your computer to allow your computer screen to actually play games, right? It was only cyan and black. But if without that card, you couldn't, there's no graphics that be created, right? So I remember begging my dad to put this into the computer so we could play, I think, like a stealth fighter game. Mm-hmm. And I played that game till my fingers were raw. And then about a year later, a new card came out that let you play, I think, in like 16 colors. And I never wanted to play that first game again, right? Disruption. And then again, graphics cards got better and better and better and better. And they keep getting better, right? Not many people want to play a 5-year-old game, even a 2-year-old game, right? A lot of gamers are pushed by the latest in graphics and the latest in speed and frames per second and all that. And so game companies know this. They have to keep coming out with better and better games. I mean, yeah, you might occasionally do a throwback and play, Red Dead Redemption 1 or something. But for the most part, if you don't have the latest and greatest, you're not going to survive as a gaming company. That's kind of what we're talking about here with cars. For the longest time, car companies could just come out with an extra cup holder in the next model year or an extra, USB drive, and you'd be like, okay, great. Now they can't do that anymore. And when we get into autonomy, that's like saying, I don't know, that's like going from a game that's single player to a game that's like online multiplayer. Like if you don't have that, people don't want to play it.
Yeah. And I mean, I think the analogy is tough for video games because everything is to do with taste.
Right.
But here, yeah, I mean, you're not going to want to pay for a car. Like this would be like if you had to buy a bus, right? If I was like, you know what? If you want to drive around in the city, you need a city bus and it's going to cost you $500,000. And you'd go, excuse me? No, I'm going to hop on the bus and I'm going to pay a fare.
Right.
And it's going to be relatively cheap. I'm not going to have to dig a subway tunnel every time I want to go somewhere. That's stupid.
Well, I think the other piece of this is people aren't even realizing all the benefits of an autonomous car. They just think we're taking something away from them. When I say an autonomous car that you don't own, you think I just said something bad to you. You're not thinking about the fact that you don't have to pay for the maintenance and the insurance and the registration and find a place to park it. And oh my God, someone broke into it. Oh my, it got keyed. You don't have to worry about any of that anymore. You don't have to change the tires. You don't have to do any of that.
And when you get in the car, you're probably going to be able to have a little desk and Wi-Fi, and you're going to be able to put your laptop down and do some work or hang out or play a game or, sleep, whatever.
Exactly.
It's going to be at that level. And it's just really hard to think about that because our whole lives we've been told by naysayers that you're not going to be able to do anything.
Exactly.
That everything's going to stay the same. It's only been little things where we're like, okay, well, yeah, I can see how a phone that's all screen. Okay. But I mean, there are plenty of people who thought that it was going to be BlackBerry forever.
Look, if you want to know more about this kind of stuff, we talk about it a lot on our Patreon Investor Club. And there we have a Slack channel where basically all of our members can join and talk about this stuff. And we have our weekly Investor Club bonus stories along with our interviews with CEOs and founders of companies. We get so much deeper into this stuff to actually help you make money because that's kind of what you want to do if you're a disruptive investor, right? So hopefully we'll see you there. We'll put the link down below. Thank you so much for joining us, and we'll see you next week.